This is the S&P 500 one-year overview reading for the year of 2024. It's currently June 29th, 2023, 6:57 p.m. Eastern Time. The S&P 500 at the time of this reading is currently 4396.44, and the shuffle file that we're about to play for the 2024 reading was created on June 16th, 2023 at 10:10 p.m. Eastern Time. That's this file right here. The overall theme and behavior for the year, we're looking for a decline that offers a significant opportunity to open up a long position. That's the main highlight. I think it's a pretty mixed year. The Princess of Cups is crossed with the Indolence card, and the Indolence card is a brief peak that's easily missed. There's only a couple of locations throughout the year where the Indolence card has a correlation. That's in March and July, and I think there's probably a peak at a similar price level in those 2 months that we sell off through multiple support levels in. I don't think they're the highest price levels, but they're probably similar. We have a highest high at the beginning of the year and a highest high at the end of the year. Out of a trough, we go into what's a highest high thus far, and then we decline into a low in May-June cusp. And then there's a pretty big move out of that low as well into July, where we have this peak or crest, and then another high towards November. We're going to get into the week-by-week chart behavior and where we see trades and all that in just a moment. I want to take a look at 2023 and see how we're doing thus far. Right off the bat, what I noticed is that we're off on the lowest low. We have a lowest low first thing in the year, and sometimes that'll happen when a year is like super bullish. Rather than getting a lowest low, I'll get indication of where there's going to be a significant low. That'll be more relevant because after January, the next important low is more important than just 1 month's worth of time. In any case, that's a little bit off. We did pick up on a prominent trough in January, a prominent peak in February, prominent trough in March, another prominent trough in early April, and a resistance level that we meet on a multi-year scale that we break down from with consecutively lower spikes up on the way down there in May. We have a highest high correlation there in June, and you can see in June we've got a highest high, and then in late June, in the midst of some price swings, there's a prominent trough that stands out. Let's get back into the rest of the reading here. It's important to understand the way that you want to read one of these. At some point throughout the year, the timing will seem a little off. It's going to be mostly on point, but there'll be some places where it's a little bit off. You have to pay attention to the sequence of events. The sequence of events, when timing is off, the sequence of events is what you go to. It'll help you get on track as far as where you need to be. You can always check out a live stream that we do on weekdays between 3 and 4 p.m. as well and ask questions there. But really, just give it about 2 weeks wiggle room and you should be good. And so each of these clusters of 4 cards represents 1 month out of the year. So early January, we have a U-shaped dip. It looks like we come out of fast sudden move higher. What's interesting is we've got this Herkimer diamond appearing here at the end of the year of 2023. It also appears here low at the beginning of January, which what makes me think there's an important price level there. And we shoot out of that and there's like a U-shaped dip in early January, a peak to a trough to a peak. Erratic behavior around the high back and forth through the same price level, in the midst of which we'll revisit a crest that was recently a past opportunity. So probably this crest here from December, the highest high, and that would be in the 3rd week. And then it looks like we even pushed the upper end of a range higher. There's maybe some decline on the cusp of January, February, but it won't last. There's a big move to the upside, and we have a breakout to take us to a highest high there for February. Yeah, and there's a unicursal hexagram energy here too. So there's either a sharp drop after we push the upper end of a range higher, and then out of that sharp drop we move to a highest high, or we just push the upper end of a range higher straight through into February and break out and push the upper end of range higher there into a high, and then we have a sharp decline. Hard to determine, but there's a sharp decline off of a highest high in there, and it takes us to an important trough that'll stand out on a 1-year scale there in February. Sideways rotation in late February, some tricky chart behavior, so be mindful of that. And then we attempt to establish support in early March. Again, we have mixed behavior, especially near the high for March. There's a sideways S formation, so we decline from resistance and meet support. We go all the way back to resistance. We reverse, go all the way back to support, creating like a sideways S. That's usually horizontal support and resistance, but on this grand of a scale, it might be at an angle. And then behavior around the low for March, there's a sell-off, a brief peak that's easily missed at an overbought peak or crest, and we sell off from that pretty notably through multiple support levels. Probably a low towards the end of the month. Hard to say. There's out of a decline in the end of March, there's a big move from the bottom of a range to the top of a range, and it looks like that move continues into April with the fast sudden move higher, rallying into an important peak. I don't think that this is a highest high here. I think that we probably saw a pretty sharp drop here with the unicursal, and then another pretty sharp drop here with the correlation to the indolence card. But an ace of wands here indicating in the midst of this fast sudden move higher in early April that we want to take protection out against our long positions, or we want to close long positions and possibly open short positions. And then there's an important support level highlighted on a multi-year kind of scale here in late April. Behavior around the lowest low for April is period of volatility and a fast sudden move higher that stands out and ends that period of volatility. There's an important trough that's highlighted in May. We have 3 pokes through the same price level followed by a sharp decline off of that 3rd poke. And this is probably where we have a lowest low for the year here towards the end of May, between the 3rd and 4th week of May. There's a lot of price change covered between the important crest that's the high for May and the trough that we see at the end of May. And the high and the low for May are within close time proximity to each other as well. But it looks like there's a lot of price change near an important resistance there in May, and then the behavior around the low, there's a significant opportunity standing out on at least a 1-year scale as one of the best opportunities there near the low. I'll talk about that in more detail towards the end of the video when I get into the best trades in more detail. But we're declining into a trough and a lowest low here around the 3rd, 4th week of May, and that's a significant opportunity to open up a long position. We get another opportunity, maybe not quite as good of an opportunity, but there is another opportunity to open up a long position here in June with some sideways fluctuating decline. It takes us into a prominent trough. There's an important resistance level highlighted around the June low. It'll be important on a 1-year scale. Behavior around the high for June, we have sideways rotation that increases with bullish momentum. And we want to remember that the behavior out of the low here, there's either severely oversold territory and there's like a short squeeze or a big move out of oversold territory. It'll stand out on the 1-year scale as one of the biggest moves of the year. Or it could be to fill a gap down, or it could be a gap up even. It's a big move to the upside out of the low, so we want to expect that. If this is a low, then it looks like this low that we probably see twice between May and June, followed by this prominent move to a peak or crest that'll stand out, not necessarily a highest high towards the end of June. That prominent move higher to that peak or crest is followed by a prominent move back down, like a full retracement of that move towards the beginning of July in the midst of price swings that'll really stand out on a 1-year scale. Near the July high, there's multiple failed attempts to break through key resistance on a multi-day scale. Behavior around the low for July, we have a period of moving along sideways, bumping along resistance. Another correlation to the indolence card here in the end of July with a brief peak that's easily missed at a near oversold territory and then a sell-off. It's possible that we're seeing a similar price level here as we saw from this peak that we sold off from in March. It's possible that we sell off from a similar price level there in the end of July. There's an important fake out or shakeout, an intentional misdirection here in early August on one of the more prominent trade opportunities for the year here in the beginning of August and possibly at the high for August as well. Pretty significant fake out here, making it appear that we're going to go lower and we have a sharp decline into an August low, followed by a pop and drop in late August. We want to cash in on a position at the high for August. It's probably like this peak or crest that we sell off from right around the cusp of August would be an opportunity around the high to cash in on a bit of an investment. And that rather than holding it all the way to November where we see a highest high, because we probably have some mixed behavior here. And you have to remember risk tolerance. You could be right and still there's a moment where it looks like you're totally wrong and you sell for a loss and then you find out that you're right. Crazy things can happen. You must be aware of your risk tolerance and remember that. I'm seeing a significant opportunity to cash out and then also a significant opportunity in early August in the midst of a decline into the August low to open up a long position. Then there's a pop and drop in late August, creating a peak that's near overbought that we sell off from pretty notably. In early September, we rally into key resistance, and it looks like through technicals like we're going to break through that resistance, but instead we turn around and we decline through key support with a completion of a rally near the high for September. Behavior out of the September low, a rally along a diagonal trend line, breaking through horizontal resistance and made a second resistance before pulling back to somewhere between those two price levels. And then there's a lot of price change and it's notable trade opportunity around the end of September, a trade opportunity around the 3rd week of September. A lot of price movement to the upside in late September. And then we enter into October. There's a severe decline. It doesn't take us to a lowest low. It just will be a sharp decline and it'll stand out. There's sideways rotation along the low there, along key support for the October low. And then there's like a new high here in October with the abundance card. Based on the amount of movement that we see in gain, it could end up being a new high here in like the 1st and possibly in the 3rd week of October. And that's where we would would close out of a significant trade. I'll talk about that in more detail at the end of the video. And then out of that peak or crest, a notable drop to the downside in late October, breaking through support to meet a second support and then rotating sideways along that support. Out of that sideways rotation in November, there's an unexpected and substantial move to the upside, a trade opportunity in the midst of that. And we rally along a diagonal trend line into the high where we have a fast sudden move higher, marking the end of the rally along that diagonal trend line, and it's followed by a breakdown through that diagonal trend line with increasing volatility on the way down. That's where we most likely have a highest high for the year. Matter of fact, I think the highest high for the year is actually in December, but we probably break new ground there in November. There's a big move out of the November low. There's an important technical price level on a multi-year scale that's highlighted. It's either at the November low or it's around the highest high, one of the two. Hard to say, because that highest high, it comes out of a move that starts out of the November low and reaches for a distant resistance for a lot of price change into the high of December, where we likely have a highest high. There's also a resistance that we bumped up against several times that we failed to break through in early December. Off of the December low, there's a sideways fluctuating rally that precedes a decline, and then late December we have a crest that we sell off from down to and through support. We do a U-shaped reversal below that support, come back and reuse it as support. The highest high is probably between like the first and second week of the month of December, with the lowest low there around the last week of May, most likely. We possibly see a lowest low over here as well. I'll mark that off just so I remember that I said that. Right, another thing that makes me think maybe we have a lowest low here is, remember, the behavior off the lowest low is going to be a significant move. It'll stand out on a chart when there's a big move, one of the biggest moves of the year here in late January into a high. And then when we're looking at the highest high, we have the futility card here. There's like a breakout here through resistance. It doesn't actually hold and we fall back down here. So that could be a failed attempt to break through key resistance followed by a decline through key support. And this would be the key support here around the cusp of February, March. And then another highest high here around November, December that has a failed attempt to break through key resistance. There's a crest that we sell off from, so that's very likely as well. That's the S&P 500 for 2024. Don't forget to subscribe, my friends. It does the channel so much good when you subscribe, so make sure to do that. And if you've already subscribed, you can always share. What we're trying to do is take the competitive energy of the stock market and transmute some of that into goodwill. And the way that we do that is the rule of karma for the channel. So stay tuned. We're going to get into the best trades. And just so you guys are aware, this S&P 500 one-year reading is an example of what the one-year reports that we offer on our website. If you're interested in getting your ticker or your crypto covered and it hasn't been covered by the channel, one of the best ways to do that is to go to one-year report under our services on tarotfortraders.com. SO Meta Posts, one-year report, click here to order, and then just specify the year and specify the ticker symbol. It's a great way to support the channel. We remember the names of everybody that does that. If you're utilizing the information, you really should. It's the right thing to do. Before we get into the best trades that we see for the year, I just want to make everybody aware there's a rule of karma for the channel. It's expected that everybody utilizing this information to profit is following along with the rule of karma, because that's really the right thing to do, guys. It took me a lifetime of hardship to figure out how to do this. So for those of you that follow this rule of karma, I call you my angel investors. And the rule is as follows. We expect every time you profit, 5% of the profit should be donated forward to one of these charities. What that does is guarantee abundance mentality in your own mind. And then 5% of the profit should be donated back to the channel here through one of these links. That guarantees gratitude mentality in your own mind. And thank you very much. That leaves you with 90% of the money left over. Make sure to spend it out of love. That keeps your conscience clear. And those three components are necessary to manifest wealth. So follow that rule. The universe is going to send it back to you tenfold through this channel, my friends. All right, let's get into the best trade. First off, we need to point out that there's a cross-reading congruency with this push to the upside to push the upper end of a range higher. There's a U-shaped dip in early January that you could enter into a long position and close that long position when we revisit a crest or peak around the end of January, or like 2-3 weeks in maybe. I mean, that's when I would exit out of that long position. There's opportunity in the midst of a breakout to the high in early February, and I would open up a short position there in the midst of when we bump up against resistance. It'll look like we're breaking out through it, but instead we're going to turn around eventually. So that resistance on a multi-day scale would be a good entry point for a short position, and you'd hold that short position until a lot of price change had been covered into early March, where we're doing sideways rotation along key support, attempting to establish support. And there should be a period of volatility around a key price level in there. An important support level on a one-year scale at least. You could also open up a long position there around that support and hold that long position into the rally that we have in April, to the April high. That rally, I would look to exit again when we're bumping up against key resistance on a one-year kind of scale in the midst of a rally. And the high in April is going to be move higher through resistance. We stay above it briefly and we break back down through the same price level shortly thereafter. That's really advised to enter into a short position there in April in the midst of that rally into the high. and then you would close that short position in the midst of a significant decline and a lot of price change to the downside moving into late May. You'd be looking for a decline that takes place after there's a brief peak that's easily missed there, actually. There's an indolence correlation there, so a brief peak that's easily missed followed by a sharp decline into a low for the year. And that's where I would exit a short position and enter into a long position. You could position yourself around the May high. You could position yourself in both directions as well and cash in on the low and then cash in on a high at the cusp of July, August. When rotating sideways along key support at a higher level, you should be able to exit out of that long position, or you could hold that long position into the highs. I'd probably open up a long position here and hold that long position in through the end of the year, most likely. There is a pretty juicy trade. So in the midst of this fake out to the downside here in early August, we'll probably sell off from a similar price level that we sold off from this crest into the March low. We'll probably sell off into a trough here in early August from our peak or crest that started at the end of July, and that'll be a fake out to the downside. You can utilize that in a lot of price change to the downside as opportunity to open up a long position, and that would be a decline after meeting a peak or crest that you close out of a long position from. You could actually do a short into the low, like a 1 month swing short into the low, but the juicy trade is to open up a long position in the midst of that decline and then close that long position when we meet a new high, probably the cusp of October, November. Another pretty significant move to the upside out of the low in November. You could open up a long position in early November. As long as it's before an unexpected move higher on a multi-day scale, you can open up a long position, and then you look to close that long position around the cusp, or probably in December in the midst of a rally. We reach for distant high, and that's where I would exit out of that long position. And that's the S&P 500 for 2024, my friends. Don't forget to subscribe. It's so important to subscribe, my friends. And most importantly, as always, make sure to follow that rule of karma. It's the right thing to do, and the universe will reward you for it. Thanks for watching. I'll see you guys on the next one.